Hi, welcome to the show. If you could just start by giving us a sense in terms of how you expect the day to pan out and what your strategy might be on an intraday basis.
Sure. Hey, good afternoon to you and all the viewers. See the overall trend for Nifty. We can clearly see there was a big gap down yesterday. No attempt to fill the gap. Even today, we have not yet moved back about that 15,900 mark, which is an important level. And there is no gap filling attempt. So given the fact that we are lying at a support which was seen on 8th of March, if you look at the charts, 8th of March was a low which formed on the Nifty around that 15,770, 15,750 mark. And today we are again back to that level. So 15,650 to 15,700 is a support zone. We are managing to close above that to some extent. So there is a possibility we can see some kind of a pullback towards that 16,000 mark. But having said that, the overall trend looks very tricky as of now. I think it is better to wait. If Nifty can manage to take out 15,880 on the upside, possibly we can get a 100-point squeeze towards that 16,000 psychological level. But if the low of the day, which is around 15,670, 660 gets broken, then another round of selling will start. So one has to trade strictly with a stop loss and observe how the day closes today.
Absolutely, Ashish. You're making the point of how the call writers at 15,850 weren't letting up, even as the Nifty was around that 15,830 mark. And that was a dead giveaway that maybe at some point we will face resistance. And in the next 15 minutes or so itself, we saw some resistance. And now the Nifty is back into red terrain. The Nifty Bank also just about flattening out. In light of such sort of volatility, what other stocks do you back then?
Also, I would just like to add that 16,000 call writers are extremely active. If you check the change in 16,000 call, there has been a huge change. So it is unlikely to cross that 16,000 mark unless with a big gap. So because of the gap, that's possible. Now, given this current scenario and the volatility, I would like to stick with the large cap names. Possibly something like Adani Port right now, because it has come to the levels of 680, 690 multiple times. That has acted as a support from where we have seen bounce back in past 6 to 8 months. And we are seeing a bullish candle formation right from that level again this time. There has been a positive divergence and there can be an attempt on the upside. So one can create long position, but with a strict stop loss of 692 for target of 770. And the next stock on the buy side is going to be Eicher Motors. Auto space has managed to outperform to some extent, especially Eicher Motors. If you look at the lows formed at around 2620 just 3 days back, it has managed to protect that, bouncing back from its 20 days average, looking like it's heading towards 2950 levels. So one can create long positions in Eicher Motors with a stop loss of 2640 for the target of 2940.
All right. Thanks a lot, Ashish, for joining in and giving us your views. In fact, talking about the market itself, well,